The latest housing market data is in, and the U.S. median home price has posted another record high. Yeah, that's right. When so many buyers are priced out of the market, we're still seeing record high prices at the national level. A housing crash? It's coming. It's not here yet. In today's video, we're going to look at the current state of the housing market and what it means specifically for buyers and sellers. Let's get into it. Welcome to Real Estate Watch, the channel that focuses on forward-looking real estate analysis for the U.S. and regional markets. If you're new to the channel, my name is Eric and I am a professional economist in addition to being a licensed real estate agent, so I can bring you a unique perspective that you'll be hard-pressed to find on other YouTube channels. We're looking at the U.S. housing market today, and believe it or not, we're seeing another month of record high median home prices. According to Redfin, a national real estate brokerage, the September median price for a home in the U.S. was $431,000 on a seasonally adjusted basis. That is a 4.1% increase from the same time a year ago. Demand remains weak as sales levels have basically flatlined at historically low levels, and new supply on the market is up from the worst point over a year ago, but down from the recent peak. Overall supply levels are still well below where they were before the pandemic, which is maintaining upward pressure on prices. It's a familiar story and one that hasn't changed much over the last year. Today we're going to look at what the current market trends mean specifically for buyers and sellers. We'll start first with buyers. For those buyers currently in the market and potential buyers that are waiting on the sidelines, I feel your pain. With prices still high in so many markets, it's just getting harder and harder to afford a home. The average housing payment as a percent of median household income was 37% in September, down from the peak of 42% back in October, but still above the peak of 36% in the last housing bubble. The recent decline was due to mortgage rates coming down in anticipation of the Federal Reserve cutting their Fed funds rate, which they did at their September meeting. It was a big rate cut too. 50 basis points instead of a more standard 25 basis points. They also penciled in more rate cuts this year. All of that was supposed to lead to even lower mortgage rates, but to the surprise of many, mortgage rates have actually ticked up since that last Fed meeting. As of Thursday, October 24th, the average 30-year fixed-rate mortgage was at 6.5%, up from the recent low of 6.1% at the end of September. Why have mortgage rates actually gone higher after the Fed rate cut? Blame the bond market. The yield on the 10-year Treasury bond, which has a big influence on mortgage rates, has gone higher since the Fed rate cut. After hitting a recent low of 3.6% in the middle of September, it has risen to 4.2% in recent trading. Why has the 10-year Treasury rate gone higher as the Fed is cutting their Fed funds rate? No one seems to know for sure. There's a lot of speculation, but no clear answers right now. I'm not going to get into it right now. I'll present it in a future video. I have some ideas of my own and I'm doing research, but as of now, we're not seeing the kind of relief in mortgage rates that so many people thought we would see after the Fed surprised with a big rate cut and signaled more rate cuts are on the way in the months to come. This is the situation buyers are faced with. High prices aren't likely to come down anytime soon unless we get more supply on the market, and mortgage rates aren't likely to come down until the bond market sends the yield on the 10-year Treasury down. No one seems to have a clue when or if that is going to happen anytime soon. So if prices and mortgage rates aren't likely to come down in the immediate future, buyers need to be looking for opportunities, and there are some out there depending on your situation. A great example of this is when we look at the market for existing homes and new homes separately. Here's a graph of the U.S. median price for existing homes from the National Association of Realtors, which I am a member. It looks a lot like the Redfin graph for all homes I showed earlier, which makes sense given that existing homes make up the largest segment of the national housing market. Now, here's the graph of the median price for new homes from the U.S. Census Bureau. looks a lot different, doesn't it? Looking at them together, you can see the difference in trends. As the median price for new homes has been heading lower, the median existing home price has been heading higher. What accounts for this? Supply plays a big part. Here's the month's supply for existing and new homes, which shows how fast the current inventory would be exhausted at the current pace of sales. There's a much larger month's supply of new homes than existing homes. But the motivations behind the sellers play a big role as well. Generally speaking, home building companies are the sellers for new homes, and given that they are a profit-seeking enterprise, they are much more motivated to move their inventory than the average homeowner is. If the builder doesn't sell fast, they'll have to keep the inventory on their books, which is a cost and eats into their bottom line. Their business revolves around building and selling, and then building and selling, and keep repeating that process. Many homeowners have the option to continue living in their home while it is on the market, or they can keep it and rent it out. Builders are much more incentivized to sell their inventory, and that is something that home buyers can take advantage of. The affordability challenge so many buyers are faced with is forcing builders to dig deep in order to move inventory, offering things like mortgage buy-downs to lower the interest rate for a certain amount of time. Some builders are lowering prices to entice more buyers. For builders that can offer their own financing, they can have lower rates overall and give credits at closing. Now, not all markets have new homes for sale, but if you're looking into buying in an area that does have them, this is a great option to consider. Another thing to keep in mind is that not all markets look like what we're seeing in the national data. A great example of this is the Austin, Texas metropolitan area. During the pandemic, this was one of the hottest markets that saw a big surge in home prices, but over the last few years, we've seen prices steadily come down. As of September, the Austin median home price was at $436,000 on a seasonally adjusted basis, which is down 18.1% from the peak of $533,000 in April of 2022. One of the big reasons prices have come down is because supply has gone up. The month's supply in Austin was at 4.6 in September, much higher than it was before the pandemic. Austin isn't alone in the price declines it has seen. Many markets are experiencing this as well. The reason we haven't seen this show up in the national level data is because there are also markets where prices are still rising. So if you're a home buyer or potential home buyer, know that there are opportunities out there, especially if you have some flexibility in where you can move to. Areas with new home construction or markets where prices have come down are worth taking a look at. If you're interested in a video that identifies some of these market opportunities, let me know in the comments section below. If there is enough interest, I'll do the research for you and present my findings. But many buyers are geographically restricted and unfortunately may not be able to take advantage of opportunities in other areas. In that case, you may just need to sit tight. What we're seeing right now is a real estate market that is way out of balance, and it is highly improbable that it is going to stay like this forever. We need only look at that affordability chart to see why. The average housing payment as a share of household income is just unsustainable. Yes, it has come down from its record high, but the levels we are at just can't continue. Markets have a way of balancing themselves out over time. This is basic economics and how supply, demand, and market clearing prices work at a general level. The difficult part is that no one knows how long that is going to take, and for now, buyers and potential buyers have to wait it out the best they can if a home purchase is just too unaffordable right now. Now, for sellers, you're facing the same market conditions as buyers, but you're on the other side of the transaction. If you are in a market where prices haven't come down, this might be your best time to sell. I'm not trying to give you real estate advice right now. I don't know you, and everyone's situation is different, but it's important to keep in mind that we are in a real estate market that is way out of balance, and at some point, something's got to give. The signal from the bond market is that mortgage rates aren't coming down anytime soon, so the only way for the market to come back into balance is if incomes go way up to help buyer affordability, which is pretty unlikely, or if home prices come down. Supply is still tight in a lot of markets, which is why prices haven't come down in many areas. But a market correction is coming at some point. And because of the way homes are valued in a real estate transaction and because of the market trends, this market correction could come at an unpredictable time. When you work with a real estate agent to sell your home, they will likely do what's called a comparative market analysis. Essentially, they look at comparable homes that have sold recently in your neighborhood, take into account local market conditions, and come up with a list price to put the home at on the market. The point I'm trying to make here is that your home's value is, for the most part, a function of what other similar homes in your neighborhood have sold for recently. But what happens when one or more of the homes in your neighborhood sells below what others have been selling at? This could happen for any number of reasons. Life changes, such as a death in the family, a job loss, or a breakup of a household, could create a situation where the owner needs to sell fast. It could also be an investor that needs to quickly liquidate their asset for some reason. In our current market, where buyers are having a hard time affording a home, such a seller would need to price their home below average in order to close the sale fast. Why is this important? Well, if this has happened in your neighborhood, when your real estate agent does their comparative market analysis, this home that sold fast and below average prices is now one of the comparable properties that will affect the list price of your home. You're going to have a hard time justifying a higher list price when a comparable property sold for much lower than what you want to sell for. In a typical market, this wouldn't be much of an issue. There would be enough other comparable properties that have sold so that your agent didn't have to take account of a low price sale. But because of the way things are in our current housing market, this is more of an issue now. Home sales across the U.S. are way below historical trends, and with fewer transactions happening for agents to use in their comparative market analysis, each home sold carries a much higher weight in that analysis. My point here is that on average, home prices are high, and if you want to get top dollar for your home, this is the market to be in. It may be tough finding a buyer because of the affordability challenges right now, but I find it hard to see how things are going to get better for home sellers over the next year or two. And if you're one of those sellers that has to buy another home after selling your home, take note of the points made earlier for buyers. There are opportunities out there for new homes in markets where prices have come down. Again, nothing in this video should be considered real estate advice. I'm just trying to bring you some information to help you with your real estate decision. I hope today's video has been helpful for you, and if you are a buyer or seller in today's challenging market, what's been your experience so far? Do you have any advice for other buyers or sellers based on your experiences? Let me know in the comment section down below. If you want to see more of my content, make sure you are subscribed and hit that notification bell down below so you won't miss my next video when it comes out. And if you can do me a favor and hit that like button on the way out to support the channel and help it grow, it would be greatly appreciated. Thanks for stopping by. I'll see you in the next video.